Good morning, dear friends. We have been discussing the various provisions of the income tax with regard to the computation of income under the head income from house property. In our last discussion, we discussed, rather we identified the various situations or category under which the house property may be classified, and we identified that there are 7 categories under which it may be classified, and the various categories may be the house property which is let out for the entire year, the house property which is not let out for the entire year, means it is let out for part of the year and there has been some vacancy. Similarly, house property which is vacant for the full year. So this way we just discussed the 6 situations out of 7, wherein we also learned how to calculate or how to determine the annual value of the property under the various situations. Now we are left with one situation, last situation, which is very important, and we'll just try to discuss this particular situation or eventuality with some examples. The situation is the residential property which is let out for a part of the year, and for the part of the year it was occupied for self-residence purpose. It means two things are there. There may arise 2 possibilities. First, one possibility may be that the property is partly let out and it is partly self-occupied. Means, for example, there is a bigger house. Say this is a bigger house. Half of the portion may be used for self-residence purpose and half of the portion may be let out. It can be the situation also. This is the case of one property where one portion is self-occupied, another portion is let out. If, for example, there is a house property which has got a vertical expansion, means the ground floor may be occupied by the owner of the house and the first floor may be given on rent, means the first floor has been let out. So this is the first eventuality, this is the first situation under the residential property which is let out. The second situation may arise when the property has been let out for the part of the year. It means the period is there. Here in the first example, no period was there. Here some portion of the property is let out for the self-residence purpose and some portion the rest of the portion is let out on rent. The second possibility is that the property is let out for the part of the year and for the rest of the year the property was self-occupied by the owner of the house. So we just try to discuss both these situations with example. So first of all, we just take the first situation, means first possibility or eventuality when the property is let out and it is partly self-occupied also. Now what would be the treatment under that? Now this situation we just try to understand with an example, but some core things are required to be understood before we proceed with the example. The treatment when the part of the property is self-occupied and the part is, the let out portion shall be computed separately as a let out property, and the portion which has been self-occupied, which has been occupied by the owner, shall be computed under the self-occupied portion. Number 2, where the municipal value or the fair rental value or the standard rent is not given separately, means it is not given separately for the self-occupied property and the let out portion of the property. If it is not given, then we will have to make a bifurcation or an apportionment between these two, self-occupied portion and the let out portion, based on the floor area. Third is, if the municipal taxes have been paid for the full property, for the whole of the property, then the bifurcation has to be made between the self-occupied property and the let out property. The last important point to be noted here is the interest allowed under section 24B, as we discussed earlier also. It can be claimed without any restriction in respect of let out portion. I think we have already discussed a lot in this particular regime. However, for the self-occupied portion, it can be claimed as a deduction as per the limits of 30,000 per annum and rupees 1,50,000 per annum. That depends upon the amount of loan where it has been taken. So these are the points which have to be considered. Now this particular concept we can explain with an example. The concept can be explained with the help of an example. We can see the example. Mr. X owns a residential house property. It has two equal residence units, Unit 1 and Unit 2. While Unit 1 is self-occupied by Mr. X for his residential purposes and Unit 2 is let out. The rent of this Unit 2 is 6,000 rupees per month and the rent of the 2 months could not be recovered. It means this is the case of unrealized rent. And the various details in respect of the let out property is the municipal value of the property is 1,30,000. Similarly, standard rent is 1,25,000. Here the municipal value of the property is given. It means he has given the valuation of this property, municipal valuation of the whole of the house. So no bifurcation has been made. We presume that both the units are equally divided and 50% is being occupied by the owner of the house and the 50% has been let out by him. So accordingly we'll just try to solve this question. So first of all, we should be familiar with the various variables or various details which are given in the questions, that we'll just try to solve it. Fair rental is 1,40,000 and municipal tax imposed is at a rate of 12%, which is paid by Mr. X, and other expenses for the previous year 2005-2006 being repairs, insurance, etc. Here our main purpose is to understand the concept. So this is a clear case of a house which is being self-occupied by the owner, as well as some portion of the house has been given on rent. So we'll just see, first of all, we'll see the valuation of the self-occupied unit. Means in the self-occupied unit, the gross annual value of the house shall be taken as nil always, because when the house is self-occupied, then its value shall be taken as nil. If the municipal taxes have been paid, no deduction shall be available in respect of self-occupied house. Even if a person has paid the taxes, it means he will not be eligible for having any deduction on this account. So in this case, the municipal taxes have been paid at the rate of 12%, but no deduction would be made. It means the municipal taxes would be nil and the annual value of the property shall be nil. However, he would be eligible for deduction under section 24B in respect of the interest rate, in respect of the interest which has been paid by the owner for half of the portion, limited to 30,000 rupees or 1,50,000 rupees. Here the maximum limit would be 30,000. So this is the way we can calculate we can make the calculation in respect of the, yes, interest on capital is 63,000. So half of the portion is there. So he will be eligible for the interest portion to the extent of 31,500 limited to 30,000 rupees. So minus 30,000. So here it will have a net minus value of 30,000. So that is the valuation in respect of the self-occupied property. And now we just see how we can make the valuation in respect of the rented property. The municipal valuation in respect of rented property would be taken 50% of 1,30,000. So 65,000 would be the municipal valuation. Municipal valuation would be 65,000. Fair rental value would be 70,000. And standard rent is 62,500 because the standard rent for the whole of the property is 1,25,000. So as a rule, first of all, we will have to compare these two figures. So we will take higher of these two. The higher of these two is 70,000. So 70,000 would be compared with standard rent, and we will just take lower of it to step number 2. It means 62,500 would be the expected rent in this case. Since there is no vacancy allowance, however, that there is unrealized rent to the extent of some 12,000 rupees, that will be taken care of separately, and we are just assuming that he is entitled for this eligible deduction subject to fulfillment of the conditions which are applicable for availing the deduction under unrealized rent. I just narrated four conditions. Means he should be a bona fide tenant, and all the steps should have been initiated against him for vacation of the property by him, and he should not own any of the house properties already owned by the. He should not hold any of the other house property of the owner like that. So we presume that these conditions are fulfilled by the owner. So 62,000. This is the expected rent, whereas the received rent is 72,000. And if we just give a deduction on account of unrealized rent, the net amount of rent realized by the owner is 60,000. So we'll just take higher of these two. The higher of these two would be 62,000. So that would be my gross annual value, 62,500. So from 62,500, we'll be deducting the amount of tax, means the half portion of tax. The tax is 7,800. The balance is 54,700. That is got net annual value. And the SSC is eligible for 30% gross deduction, that is statutory deduction, which is applicable to the SSC under section 24A of the Act. And standard deduction comes to 16,410. Interest or borrowed capital is 31,500. However, in our self-occupied property, we just deducted 30,000 only, because the maximum eligible deduction for the self-occupied property in respect of the interest is 30,000 or 1,50,000. So 30,000, here there is no limit in respect of that deduction. So the income of the rented unit is 6,790. So this is the way we'll have to bifurcate, we'll have to evaluate, we'll have to determine the annual value of the property when the property is partly occupied by the owner and partly it is rented out or it is let out. So this is the way we can calculate. Now the next possibility is the next probability of this properties. For part of the year, for the part of the period, this property has been occupied as self-occupation, and for the balance of the year, it has been given on rent or vice versa. In such cases, if this is the situation, then the property shall be deemed as let out throughout the year. So this is very, very important. For example, if the property A has been given on rent for 9 months during the previous year 2006-2007, and for the rest of the period, that for 3 months it has been occupied by the owner, in this case it shall be deemed as if it is let out for the whole of the year, and accordingly the valuation shall be made. So this is the way we can make the valuation of the annual valuation of the house property. Thank you very much.